10 a.m. on Tuesday, and it's time to delve into the world of business here on Business Morning, coming to you live on Channels Television. That's right, for the next 55 minutes, we'll give you updates from the world of business. I'm Ini John McQuarrie. Well, the first update that we would like to give you comes from Nigeria, and that's talking about the aviation sector in Nigeria. Remember yesterday, over the weekend, that is the conversation about the threat to shut down by airlines and all that. Well, yesterday, the leadership of the House of Representatives may have resolved the issues, which led to the Airline Operators Association of Nigeria threatening to shut down flight operations across the country. Well, during a national a meeting at the National Assembly, the House leadership, led by the Speaker, Femi Gbajabiamila, secured the commitment of the Nigerian National Petroleum Corporation Limited to make available 6 million liters of Jet A1 aviation fuel to marketers in the interim. It was also resolved that the airline operators must commence as soon as possible the process of securing a license for the importation of aviation fuel to avoid suspicion over the landing cost of the product and other associated logistic issues. And related to that, activities at the airport in Lagos yesterday appeared unaffected as airline operators called off their planned suspension of services. Passengers were seen traveling through the Murtala Mohammed Airport earlier. Meanwhile, aviation workers, those are the people you're seeing on the screen, they commenced a 2-day warning strike over the non-implementation of new conditions of service. At the Lagos office of the Nigerian Civil Aviation Authority in Ikeja, union members gathered at the entrance, barring staff from entering the office, while the same situation persists at the Nigerian Airspace Management Agency. The Assistant Secretary of the National Union of Air Transport Employees, Ochema Abba, said that owing to the strike, there's been no weather information for flights.
Since today, NAMA as an organization has not operated anywhere in Nigeria. Nobody has gone to any office in NAMA nationwide. And their activities, the only group of people that we had no business with in NAMA are the air traffic controllers, who had made clear that they are not part of this activity, and they are not members of NOATE or OPTA. And so we didn't have any issues, or we didn't go near any control tower. I'm aware, as a matter of fact, that air traffic controllers are presently out of their stations, and it is the Air Force. I can say that for Lagos. It's currently the Air Force that are operating the control tower in Lagos. I don't know what is happening in other airports. So it's important that people know we don't have an objective to say aeroplane should not fly. Our objective is that NAMA as an organization will become inoperative, NCA as an organization will be inoperative, and NCAT as an organization will be inoperative.
Well, another burning issue in Nigeria is the issue of electricity supply and tariff. And the chairman of the Nigerian Electricity Regulatory Commission, Mr. Garba Sanusi, had refuted reports of an increase in electricity tariff, which came to effect since December 2021, saying that there was no new hike to the tariff. The chairman says that the agency has not approved a new tariff, but the report has given the impression that it's a recent increase. Well, NERC on its website on Thursday, the 5th of May, published a review of a tariff increase for 6 distribution companies with effect from December 2021. Well, to help us delve and understand these issues, the issue of tariff, of course, versus the issue of electricity supply in Nigeria, which is not a new conversation, we must add. We have the partner at ALEX, Mr. Shino Sipasi, joining us now for this conversation. Good morning, Mr. Sipasi. Thank you so much for your time this morning.
Good morning, Nini, and thank you for the invitation too.
Great. So I think let's just be real now. In the past, say from January till date, have you noticed an increase in your electricity tariff?
Yes, Yes, so there has been an increase. The increase became immediately noticeable when the February tariff was paid. That was when the increase became instantly noticeable, at least in the area where I stay. But of course, it has always been in the news all over the nation that consumers have noticed that there has been some increase, albeit slight, in their electricity tariff.
Yeah, so I believe the provisions of the electricity power sector reform allows for minor tariff review every 6 months. And especially now, I mean, we just talked about the airlines. They are complaining of increase in jet fuel. Operational cost has gone up everywhere. So should we be having this discussion, even though the NERC boss there has said there's no increase? But I believe that when you fill your card and you load it to your meter, you notice that you don't have the same units that you used to have even before now. But I mean, operational cost is up, inflation is up everywhere, FX challenge is there. So is it justified if there's an increase at this time?
So the issue of increase should be something that consumers should get used to, and I think it is important for consumers to understand exactly how the tariff mechanism works. Just like you have mentioned, there's expected to be a review twice in a year, every 6 months. And the reason for this are exactly the macroeconomic indices that you have mentioned: inflation, interest rate, and so on and so forth. So as long as those keep changing, these are critical inputs. I mean, these are critical inputs that go into the electricity supply chain. As long as those keep changing, we're going to have a situation where there will be increases. Now, the way the system is designed is that if the changes are reduction, if the changes in the macroeconomic factors indices are tending towards reduction, what we experience also is a reduction in the electricity price. Now, concerning the comment by NEC that it has not increased electricity price, well, I think that is employing a bit of sophistry there, because really there has been an increase. Yes, it could be argued that the order that allows the increase had been signed since the 29th of December 2021. It was expected, the order came into force in January 2022, and then the actual increase took effect from February 2022. So in that sense, the fact that they're just publishing the order on their website does not mean that the increase or the authorization for increase just occurred. That authorization for increase is something that had happened since December, and I think it is a way of crisis management process that they have decided to issue the order in December, but they didn't release it. But somehow everybody noticed an increase in their prices, as from February. So it's quite an interesting way to do it, and perhaps that is the way they think they could manage the protest or the crisis that may attend the increase in the tariff. But there has been an increase.
So I guess that also points to the issue of the rights of consumers. Is it compulsory for consumers to be informed before there's an increase? Or, I mean, do consumers just start calculating that since they access every 6 months, we should expect a review, even though the review doesn't necessarily mean it should be an increase, it should be a reduction at some point. I don't know how that will happen. But, I mean, do consumers have rights to be informed, or they have already been informed, by the provisions?
Absolutely. The consumers definitely have rights to be informed. But the issue is that who is responsible to make this information available? So there are two ways to look at it. There's a responsibility that is that of NEC, that is the regulator. There's a responsibility that is that of the DISCO. If the DISCO is going to effect any change, the DISCO is duty bound to inform its consumers that this change will happen, and then they can give explanation for the change. Now, the responsibility of NEC, when NEC is doing any review, for instance, when the DISCO, person to this, before this review happened, when the DISCO submitted their proposal for their performance improvement plan, when they submitted it, there was actually a public forum that was organized by NEC. And this public forum is open to every consumer. Everybody could have attended it. This public forum was widely publicized. So that was NEC's statutory obligation, and NEC has fulfilled that statutory obligation. So NEC really doesn't directly owe the consumer the duty to come and start informing each consumer that this will be your electricity price, because NEC is not in direct relationship with the consumer. The party that is in direct relationship with the consumer is the DISCO. And the DISCO really ought not to have effected the increase without adequately informing their consumer. And they can do that through their website. They can do that through adverts that they place on TVs and on other media. They can do that by displaying it in the different offices and in the different centers where people load their token. All this can be done. So it is really the responsibility of the DISCO, and I think it is wrong for the DISCO not to have done sufficient education for the consumers about the increase.
So failure to do that, which is the case here now, what can the consumer do? Because you still require the power. You know, you cannot say, oh, I will not work with you anymore as a DISCO. You don't have alternatives. If you're in, for instance, in Lagos, if you're in Ikeja, you're in Ikeja. If you're in Eko, you're in Eko, and there's really nothing you can do about it.
So what the consumer can do is what we are doing right now. That distribution company, you have not met your obligation. You are expected to. Now, we cannot say the remedy is not that the increase should not take effect, because the increase is indexed to a pricing system. So you cannot say that the increase should not take effect, but we can engage in serious advocacy to ensure that the DISCO do what they can do. The fact that we're talking about it, the fact that people are complaining to NEC, we also wake up NEC to that responsibility of ensuring that the DISCO does sufficient customer education before another increase takes place. Because whether we like it or not, in the next 6 months, if you look at the order that NEC had published, in the next 2 months and sometime by the beginning of 2023, there will be another increase, no matter how minor. There will be, and that is based on the way they have calculated things. And if you're looking at the macroeconomic indices, even what we have today, you will see that if NEC does another review in the next 6 months, there will be another increase. So there's a need for the DISCO to constantly engage. And as long as the DISCO constantly engage, the customers will know that in the same way the prices of everything is rising, the input factors into the production of electricity that I enjoy is also increasing, and then they will expect it to increase. And then they can even begin to have reasonable expectation about the quantum of this increase. But I do agree, it is just not nice for us to get to the place where we're going to load our token or our meter and find out that now, can anybody go to court about it? You can go to court about almost everything, but that is not likely to achieve much, because there are a lot of technical and legal issues surrounding that. That is not likely to achieve much, but I also know that it is not going to stop the implementation of the tariff.
All right,
let me even go a bit further.
Yeah.
Even if there's a court pronouncement that allows the tariff to be stopped, is just going to be a temporary victory, because almost shortly thereafter, they're going to go back to it. They will not just only go back to it, they will claw back, because that is how the mechanism works. They will claw back some of the things they ought to have billed you when you made the court suspend the bill. So eventually, it's still a bill that will be paid one way or the other.
All right, so that means that in the next maybe June, July, Nigerians should expect another review of the tariff. But I think from conversations I've had with some Nigerians, the problem might not really be the review of the tariff. It might be, do we even get the supply? Am I paying for what I'm enjoying? Or is the law just covering, you know, the review of the tariff and not looking at the supply, what I should be enjoying?
In fact, that is a very, very valid concern. That is a very, very valid concern. The truth is that, I mean, it has been the experience of the general populace, my experience, of course, that that although the tariff is increasing, the supply is not there. Even where we have been told that there's a service-based tariff, most of us who are on service-based tariff, and perhaps your experience may be different, and you can say that, most of us who are on service-based tariff, we do not enjoy the number of hours that we are expected to enjoy. Now, the issue is that there's a system to track that. And that system to track that is a system that we must be willing to implement and enforce. So in order to maintain a particular customer on a particular tariff, the rule is that the average supply to that customer over a period of 2 months will be checked. And how do you check the average supply to a cluster of customer? You check the average supply to a cluster of customer through the 11 kVA feeder located closest, 11 kVA feeder from where that cluster of customer is being served. So if I am living, for instance, in Shangotedo, and Shangotedo is, let's say, on band D, and band D is expected to get, say, an average of maybe 12 to 14 hours of electricity. It is up now to the consumer to take it up with their local distribution district to say that, look, the hours of power I have received over the past 2 months does not correspond to the service band on which you are placing me on. And as long as you can show that, you actually can make, there are a procedure for applying to the DISCO to take corrective action, either downgrade the cluster to the right tariff, or supply more power to that cluster. And if the DISCO does not respond, there's an escalation process that can be undertaken to escalate the complaints to the regulator, to MEC, the regulator.
Yeah, well, it looks like there's a lot of enlightenment that has to be done, even to members of the public, because a lot of people, I'm not sure, are aware of these processes. And I guess once the system realizes that nobody's holding them, questioning and asking for their rights, then, there's bound to be abuse of that. Just before we let you go, Mr. Shikwati, have you heard the probability of banks taking over some DISCOs, over 860 billion naira debts? Some of the banks that sponsored the DISCOs.
So that probability is there. In fact, let's not use the word probability. That possibility is there, because the acquisition of the DISCOs are financed through acquisition loan. And when they were financing them, the shareholders of this DISCO gave asset debentures and so on and so forth. They gave some asset debentures. And by virtue of these asset debentures, the banks, in an indirect way, can take over the DISCOs if they take enforcement steps. And I know that many of those loans are in arrears. So it is a possibility that is there. The reason why it has not happened, has been because there has been a constant restructuring of the loan. And there has always been appeal by the government to allow certain government intervention in the electricity business to take effect. But it is not a probability. There's a distinct possibility that it can happen if the banks get to the point where they can't take it anymore. They have every right, legally and by their documentation with the bank, to take enforcement action.
If you could just do this in just a few seconds, what would that mean for the industry, for the issue of tariff, the issue of supply? What would it mean?
It will not change the problem of tariff, neither will it change the problem of supply. What will change is that what will change will be the ownership of the vessel.
All right.
What will change will be now whether the new owners are able to inject the needed fund that can be used to expand and make the operation more efficient. Whether their approach will be different.
That will be another story.
Time will tell that, yes.
All right. Thank you so much, Mr. Shinoshukasi, partner at Alex. Thank you so much for sharing your thoughts with us this morning. Enjoy the rest of your day.
Thank you. Thank you very much.
We'll take a break now. When we come back from that break, we'll head to the commodities market and find out what's available there, what's the update there. This is Business Morning on Channels Television. You're welcome back. You're still watching Business Morning on Channels Television. Let's see what's happening with oil prices now. It dropped more than 1% today, extending the previous day's steep declines as COVID-19 lockdowns in top oil importer China. A strong dollar and growing recession risks fed worries about the outlook for the global demand. Brent crude was down $1.19 at $104.75 a barrel. And that's after it slipped as low as $103.19 previously. U.S. West Texas Intermediate crude fell $1.07 to $102.02 a barrel after it hit an intraday low of just $100.44. Yesterday, both benchmarks posted their biggest daily percentage falls since March. It dropped by 5% to 6%. The falls reflects trends in global financial markets as investors shed riskier assets and worries about interest rate rises and resulting impact on economic growth. Well, to help us drill on this, we have Bolanle Agbaje, analyst with financial derivatives, joining us now in the studio. Hi, Bolanle. Good morning.
Hi, good morning. Thanks for having me.
So, I don't know. The price of oil is still more than $100.
Still good, yeah.
Still good, yeah. Even though we're seeing it taper at this time. And we have a whole lot of factors.
Driving this.
Yeah. And then we have the Saudi scenario,
yes,
dropping their price. Why?
I think they've, looked into the market and understood that, there's the risk of demand pullback in the near term from China and some other Asian countries, facing lockdowns due to the COVID-19 virus. And although they cannot necessarily pull back on supply at the moment because we're still in a supply shortfall era, I think the best thing for them that they had looked at is to cut down price, and also the fact that dollar has gained significant amounts is the highest it has been in 2 decades.
Yeah.
And for them, they're wondering what would happen to demand. Already we're seeing a collapse with demand in China, which is the largest demand space for oil prices. But I think for them, they're just trying to be cautious and reduce. I think they reduced prices by about $5 per barrel, which is huge. Although they didn't reduce price for the US. We
and the US is trying to fill up its reserves.
Yes, they are. And also, I think one important aspect is that the US is also looking to secure a deal with Iran. And if they do succeed, it would bring about 2.5 to 3 million barrels per day, which is huge, which would more or less create a change in the imbalances in the market.
Yeah, but once we hear of Iran, Qatar, all those Middle Eastern countries, we remember the sentiments that surround the relationship between the West and those countries, and we think, oh, are they ready to compromise the issue of capital punishment, and all that? Are they ready to compromise all of that?
I think for them, they would more or less weigh their options, and at the moment, Iran needs the money. So in the meantime,
but Iran, I don't think they're ready to change their policies.
I'm sure it's something they would bring to the table because it's time to benefit from the high oil prices. I don't think they've benefited much or even benefited at all from this, high oil price era that we're in at the moment. And also Iran and Saudi, they don't mix well. So I'm sure, trying to, you know, more or less get back at Saudi Arabia. They would, you know, look for a way to make sure they secure a deal and also produce. They've not benefited, like I mentioned, and it seems like they have, you know, the oil reserves right there and then. And also for the U.S., inflation, it's becoming a very big issue.
Yes.
I think the inflation numbers are currently at about 8%, 8.5%, which is huge.
Yes.
And you know, some of these countries, especially the UK as well, they're talking about inflation growing to a point of double digits, which they had never seen.
They're not like us.
They're not.
We're used to the double digits.
Yes, and you know, it's a big problem for them. You know, they are the era where they're increasing interest rates. Some of the, you know, civilians within their countries.
And talking about recession now.
Exactly.
I mean, they talk of recession. I think the UK has already forecast that by the end of the year there'll be a recession.
Exactly, and also, you know, the Bank of England has come out to say, at this point, obviously we have high inflation. They're trying to also increase rates, create a situation where you have higher inflation, but they've actually highlighted that the inflation, the high interest rates now is not to solve the problem now, it's to solve the problem from getting worse in the future. So, you know, some of these issues are, you know, the reasons why, you know,
and we still have the Russia issue also.
Yes, we do have the Russia issue, and it doesn't seem like the Russia issue is ending anytime soon. It's dragged on longer than what we had expected. And it seems like it's still going to be going on.
And then the EU is talking about banning oil, banning coal, banning gas.
And you know,
Africa is getting a lot of attention now.
It is. But I think in oil in particular, I think the reason why we found ourselves in this situation is because, you know, in 2015, we had seen, you know, the oil price shock, and, you know, most countries were talking about the fact that they wanted to pull back on investments in oil. And so some of these countries did. And then you were faced with, you know, the financial crisis, you know, the COVID-19 issues, and now the Russian, you know, war. So all these issues, all these external shocks have created a situation where they were not able to, you know, they had already pulled back on this investment, so it's not
because
easy
investments are things you would, if you had done then, now you can benefit.
Exactly. So it's a very tight situation for the oil market at the moment, and other grains.
Yeah. And we see that Nigeria and Angola account for about 50% drop off. Yes. Not meeting with OPEC.
Nigeria lost about 400,000 barrels per day, and Angola lost about 300,000.
What's going on? I mean, we know our Nigeria. What's going on with Angola?
So with Angola is the investment issue. They had pulled back on some of these investments. So at a time where they need to, you know, ramp up production, it's not as easy. And even if they do make the investments now, you're not obviously going to see the benefit at the moment. Nigeria is a very different ball game. You have the oil vandalism, pipeline vandalism, oil theft. You know, all that has, you know, made sure that we do not benefit from this at a time where we actually, you know, are paying so much in subsidies. And
this would have been a huge buffer.
It would.
You know, and now we're talking about the jet fuel oil.
Exactly.
And then airline operators are asking for subsidy.
Exactly.
The government is still struggling with petrol subsidy.
They definitely
can't. How can they, you know, sponsor another subsidy?
No, they can't afford it. And, you know, like on the news as well, you're seeing queues resurface in Abuja. They also, although marketers are claiming that, you know, it's because of the Salah break and all that, but we do know.
What NNPC said.
Yes, but we do know that, you know, it's hard for them. It's getting costlier to, you know, supply oil at this particular price. And, you know, these subsidy payments are not sustainable. You know, the IMF has come out to say this debt issue, debt trap, all of those, you know, talks is going to make it very difficult for us to
And the projection for subsidy has hit 4 trillion naira, which doesn't look like it will cover for the year.
It wouldn't. It's clear that it would actually, if oil prices, you know, still follow this trajectory.
Not looking very good. And then we can talk about wheat now with a hike in the price. Nigerians are looking for alternatives. I wonder, you know, we're trying to do the cassava bread the other time, and a lot of Nigerians were not comfortable with it.
They're not. You know, some of these producers of bread, pasta, pastries, they're all looking for substitutes to wheat. I think wheat is currently trading at about over 1,000 now, and we had never seen that before, at least in my time. And it's a dangerous, era for us. And the fact that most of these producers, bread, pastries, and pasta producers are looking for substitutes. I think some of them had mentioned cassava flour. Some of them had mentioned rice. All these substitutes that don't actually meet the tastes and preferences of individuals within the economy. So it
looks like Nigerians will have to do something about our taste board now. Reality is just hitting
Nigerians.
home.
I wouldn't be surprised if, some of these substitutes are already in the market and we don't know about it. But
you taste it.
You will
if you
probably
eat bread that's different from what you've been eating,
I think
or meat pie or something.
Yeah, I think some of these producers will be strategic about it. The percentage of, normal wheat to the other substitutes that we have, to make sure they don't taste, the taste doesn't change drastically. And also, Nigerians would more or less look for other substitutes like yam and, the likes of the other substitutes they usually take in the mornings.
Yeah, but unfortunately, even those local ones, we're not getting a lot of or extra supplies. We still have the challenge of insecurity, the challenge of storage, the challenge of fertilizer, still facing
all
farmers.
those supply side effects are still there, lingering. And it seems like, right now we're not really doing anything about it, but we just have
somebody asked me, I mean, we do see a lot of efforts by some countries. That's why we have the crop protectionism. We had like Malaysia stopping the export of palm oil just for this season to protect that. What are some of the efforts that's
Nigeria? Yeah, and even like you mentioned, Malaysia, India as well has more or less stopped the export of wheat because they're trying to secure and make sure that the amount they produce is enough for their domestic consumption. Nigeria is not doing anything about that. I don't think we've even been able to produce enough for our, domestic consumption, even when things were buoyant and great. But now I don't think that's the case. And some of these producers, I think they benefit more from exporting, the particular products because, they can secure the dollars that way. And, our exchange rate is not really smiling at us. We do expect that with all of this happening, there will still be volatility, or at least volatility to the downside. And that's a big risk for us.
And major threats to food security. The FAO just released price index, and they said, okay, for last month it tapered a bit.
Yes.
But I mean, I don't think that's a lot for us to celebrate.
Yeah, looking at domestic commodity prices, we've seen the price of flour increase to about 24,000 per 50 kg back, and as at last month, it was about 22,600, so it's huge. Cement also increased to about 4,200. It's not necessarily good. Tomatoes the same.
And this is cement, for instance, made in Nigeria.
Yes.
But imported raw materials.
Yes.
So of course we do expect the impact of the FX.
We do, yes, we do. And some of these, I'm sure some of these producers like Dangote, they've tried so hard to make sure the impact is not really felt so much on the consumers. But it gets to a point where their hands are tied and they actually have to,
like we're paying more for flight tickets.
Yes,
now.
we are. Jet fuel is not also great, and it's expected because in a situation where you have higher oil prices, it translates the natural way. But I think it's sad for us in Nigeria just because we don't produce, we don't refine our own, oil. If we did,
we would have been protected.
We would have definitely been protected. The same way Saudi Arabia is protected.
Algeria.
Yes, they're all protected from, this external shock, but we are more or less acting or facing the same impact as, consumers face within the global space.
Yeah, so we have high Jets A1 fuel for jet fuel. We have, of course, that translating to high commodity prices.
Yes.
We have the tariff, electricity tariff also.
And also high inflationary environment. Our inflation numbers are expected to increase to about 16.2%. And, this calls for what the Monetary Policy Committee will do in the next meeting, I think, in the end
24th.
of May. And, already in the global space, we're seeing hike in, interest rate, actually policy policy rate, and it definitely leans towards the fact that, you know, monetary policy is most likely.
Because it seems the MPC, they're very reluctant about hiking
I'm
rates.
sure it's something they will do in the near term, and just because, you know, it's the only way we can, you know, curb this high inflationary environment.
Solve the problem?
It most likely will. But you know, policy rates done now, its impact is not now. It's in the yes.
Yeah. All right. Thank you so much, Bolanle Agbaje. Always a pleasure speaking with you. Analyst with Financial Derivatives Company. Thank you for sharing your thoughts with us.
Thank you for having me.
Let's move to the markets now. Domestic equities market sustained last week's positive trading. The All-Share Index closed higher by 1.9% to 51,009. Apologies for that. We had to take that commercial break. Well, let's head to the markets now. The domestic equities market sustained last week's positive trading as the All-Share Index closed higher by 1.9% to 51,903.44 points. And remember, on Friday, when I took the stock market report, we were at 50. And suddenly, in just 24 hours, we had 51,903, heading straight to 52. I see the buying interest in MTN Nigeria, supported by market performance. And we now have the year-to-date returns increased to 4.6%. Well, we have Rotimi Fakayejo now joining us. He is a trader with the NGX and should tell us what's driving this market. Good morning, Mr. Fakayejo.
Good morning.
I've been trying to find out what's driving and protecting the NGX for about over a month now. While other markets are on the flip side, the NGX is just, you know, hitting new highs. I think the market cap hasn't hit this level that it's at before. What's driving the market?
Well, I think in the 2008 era, the market got to as high as 63,000 basis points. But since then, I think in the last 12, 14 years, we've not really had anything close to that. Two things are actually driving the market. One is in terms of a return, which investors seem not to be getting from any other avenue within the investment space. Money market instruments are not as viable or does not give good return as much as you can see in the equity market. Dividends are very fantastic, improvement in the P&L of the various quoted companies, and also greater future earnings for each and every one of them. So it's quite a good one for them. And secondly, what is actually consolidating this is the almost little, very little participation of foreign portfolio investors. And that alone is actually impacting positively on the market. Because if not for that reason, assuming the foreign portfolio investors were in the market as they used to be, we'll have seen a lot of fluctuation in the last 2 years. But I think they are reducing participation in the market vis-a-vis our unstable the exchange rates, which is not helping in some space, but helping in the equity market. So I think these two factors are actually the reason why the positive trend has been sustained. So the high cap stocks in the market, the likes of Dangote Cement, the likes of MTN, Airtel, Seplat recently have been doing fantastically well. But we've not seen as much performance coming from the banking sector stocks.
Yes.
So invariably, they usually also cause some volatility in the market. So we've enjoyed some stability coming from that particular sector. So I think what we see right now is quite sustainable.
Yeah, well, I know, I noticed that, and I was wondering, the banking is also one interesting part for investors, but not at this time. But I was having a conversation about the markets with some of my colleagues yesterday, and then there's this notion that the closer we get to the elections, the higher the probability of profit-taking and a flip in the markets. What do you think about that?
Well, it usually happens prior to election year. We've seen a lot of volatilities in the market in time past. We saw it in 2014. We saw it also, we didn't see it much in 2019. and in 2018. But all in all, I think that definitely will come. But it also depends on the trend that play out within the political space, within the economy. So if there is an increasing stability in the system, then definitely we may not see as much cashing out or sell-off in the market. But if otherwise, we may see the system, the position still sustained.
So just in a minute, look into your crystal ball. When do you see the markets, going? Because we know that the market can't stay high forever. Some investors will want to cash in on it. When do you see that happening?
Well, I think it depends on what you are looking at, because investors are wiser these days. If I invest in a particular security and I'm getting a return of about 10-12% in terms of dividend, and there is still that possibility in another 9 months to come, then definitely I may not want to cash out or go elsewhere.
Right.
So, but in another way, there are people who are actually spectators in the market. Their activities have been reduced significantly because of real-time investors that are actually coming into the market. So this will happen. We're still going to wait for Q2 results to come out.
Yeah.
And thereafter, as we tend towards Q3, then we may see a lot of market play that may not really be positive for the market, but it definitely will come. But that also, the market can always overcome.
All right, thank you so much. I know the NGX, they're really excited about the markets at this time. I'm excited to report it also. Well, thank you so much, Mr. Fakayejo, for sharing your thoughts with us. And we wish you a bullish trading day today.
Thank you.
We're due for a break now, but when we come back from that break, we'll head to London. This is Business Morning on Channels Television. Welcome back. We head to London now, where Juliana joins us from our studio there. And Heathrow Airport has lifted its forecast for passenger growth this year by 16%. Juliana, good morning. Thanks for joining us. Is this an indication of full recovery for at least the aviation sector?
Good morning, Innie. I think partial is the correct term to use. I know lots of the headlines here in the UK run with that 16% figure, which is good. It's really positive. I think last month, Heathrow, which is the busiest airport in Britain, it used to be the busiest airport in Europe, but of course it was completely battered by COVID-19 over the past couple of years. But because of last month's historic numbers, as in post-pandemic historic numbers, 5.1 million passengers, bosses do feel like they can raise the forecast, which they have. So pre-pandemic, you would expect over 80 million people to pass through Heathrow, which is a staggering number. Earlier in this year, bosses forecast 45.5 million. They've now increased that by 8 million to 53 million passengers. But John Holland-Kaye, who's the chief executive, really outspoken. He's been one of the key voices in trying to get some of these restrictions overturned by the British government. He has said that, don't take this number too lightly. There are still significant challenges remaining, one of them being the war in Ukraine, of course. Then can't forget the cost of fuel, which is extravagantly high at the moment. And you can imagine how much it costs for planes to be fueled with all of this aviation fuel. And, of course, there are restrictions still in place. No restrictions in place for Britain, but there are restrictions that are triggering up elsewhere, particularly in China, because of the war in Ukraine. Not many people are talking about some of these restrictions in China, but they are increasing daily as they try to curb an influx of coronavirus infection. So it's good news. It does show that passengers are coming back. Also, as well, this announcement from earlier this morning, they did say that Terminal 4, which was closed well over a year ago, will reopen in July. And that's good because a lot of people lost their jobs. They will be recruiting more staff. Yeah, so it's, I think cautiously optimistic. It's a good way to describe this morning's announcement.
Good way, good way. But at least A bit of good news coming at this time. We have to celebrate it. Doesn't matter how cautious we are. Then another conversation in the UK is the Queen's speech by the Prime Minister, and it seems to hold a lot of promises.
Yes, the Queen's speech, or Her Majesty the Queen's speech, will be given today. But of course, it was some of the light was overshadowed by yesterday's breaking news announcement from the palace, saying that the Queen is basically too ill to deliver her speech. The 96-year-old monarch was supposed to be in the House of Commons today at 11:30 a.m. This will no longer happen. Her son, Prince Charles, will be delivering the Queen's speech alongside the Duke of Cambridge, Prince William. This is a huge story, very unprecedented. As you know, of course, Britain being the home of the Queen, the monarch, the media are in some ways playing down just how poorly the Queen is. But she is 96 years old, so it's pretty unprecedented. It hasn't happened in modern history. This is the first time in 56 years that she won't be delivering that speech. In terms of the content, we know that education is going to feature quite highly. There's an education bill. During the pandemic, so many young children were lost through the cracks. So now I believe the government are going to be severely cracking down on truancy or bunking, as it's called here, children that don't attend lessons. Also as well, the government's levelling up agenda is going to feature quite highly. We're going to be hearing more about that, taking away some of the money that's always planted in London, going back up into the north. And then we may hear something about the Northern Ireland Protocol, which was one of the reasons why Sinn Féin had such an overwhelming majority in those local elections over the weekend. So lots to go through. There will be a back and forth in the Palace of Westminster after that speech at 11:30 a.m. But the most significant part of the Queen's speech today is that Her Majesty the Queen, for the first time in 56 years, will not be delivering that statement, which has been described as unprecedented and historic.
Yeah, thank you so much, Juliana. Well, as you mentioned, she's 96 years, so I mean, that's kind of expected. Thank you so much. We'll talk to you at 1:30.
Yeah, she needs some rest.
Exactly.
Thank you.
Let's head to another market now, the crypto market, and I see Ladi's screen. It's not smiling at all. It's looking worse than yesterday.
Yes, I'll tell you who else needs some rest. Bitcoin at this point, from the dumps we're seeing. This morning is 10 points there, deeper into extreme fear, talking about the sentiment in the market. I see the market cap there, $1.49 trillion. Remember, this used to be $2 trillion when the market was in bullish territory. It's down 3.48%. Volume traded. Seeing a lot of volume this morning, $208 billion. It's up by 1.33%, coming off sell-offs, see, with Bitcoin and most of the major altcoins there. Bitcoin dominance, 41.61%. Price of Bitcoin this morning, $32,188. Did breach the 30K range and got below 30K to 29,000 this morning. We're seeing deeper, newer lows last seen July 2021. We're seeing that happen today. It's down 4.39%. Volume traded $80.13 billion, and we've seen price of Ethereum not spared too, $2,403. Let's bring in Rume Ofi now, digital market analyst. Hello, Rume. Good morning.
Good morning, Ravi.
Yeah, I see you excited, even though we're deeper into extreme fear. Rume, how are you seeing the market from your eyes?
From my eyes, I think it's a situation where people need to understand that there's a global reset. And the crypto market is not immune to that, considering the fact that it's just quite young. And this is the time for a lot of people to buy, notwithstanding the fact that we always say this on this platform, that it is not a get-rich-quick scheme. You always buy with funds that you don't need for at least a while, you know. So because of those crying now are people that have high expectations and think that, oh, in the shortest period of time, they could cash out and live their dream life. But that's not how it works. You have to at least do your DCA, which is your dollar cost average, in buying little. As little as 5,000 or so, you could also buy a few fractions and hold for a long time.
Yeah, when the bear smacks you in the face in the market, you forget all those dreams, roommate. But in the midst of all this volatility, we're seeing Japanese used car exporting company, SBI, planning to receive Bitcoin and XRP as a mode of payment. How are you seeing this?
Yeah, in Africa, a lot of used cars are actually being brought in, and SBI Motors in Japan has been doing all of that for a while now, and them saying they're going to be accepting XRP and Bitcoin as mode of payment makes a lot of sense, So, but SBI is actually more in the eastern part of Africa, doing their things right there in countries in Kenya. They've been, it's more of the Japanese cars. So, Africans usually has this taste for Japanese cars, considering the fact that we have a peculiar situation in terms of our roads and all. But I quite like the fact that, all of these Japanese car makers are saying that, they're going to be accepting Bitcoin for payments for used cars in Africa. I think their office is actually established in Tanzania, and a lot has been happening in terms of that. So people will be buying and paying in Bitcoin and XRP most effectively. I think that's a welcome development, considering the fact that a lot is happening now. But for someone like me that has this vast knowledge in this space, I don't want to spend my Bitcoin to purchase something that will not give you.
all right, man. I guess you prefer to hold your Bitcoin instead of using it for transactionary purpose. But at some point, you would want to transact in it. Thank you so much, Rumi. Always good to talk to you.
Fiat should be used for transactions. Fiat should be used for transaction, Ladi. Thank you.
Yeah, crypto for investment. All right, thanks, Rumi. Always good to talk to you. All right, now looking at the top post for market cap, there we're seeing it's all mostly red. Just Cardano there holding a little green there. 69 cents the bloodbath continues.
One thing I like about most of your analysts, they always find a way to be optimistic. It doesn't matter how low the market goes.
No matter how beating down the portfolio is.
They always have a light in the tunnel, and they see it from afar and expecting it to come closer.
Yeah, I guess they're in it for the tech and not the money.
Yeah.
Who knows? Yeah.
Okay. All right, Ladi, thank you so much.
Thank you.
And that's it on the program today. Thank you so much. Remember, at 1:30, Business Incorporated will be here, and Ladi will be back to give you updates from the world of business. I'll see you tomorrow. I'm Ini John Mekwa.